Hi, welcome to Investor Insight. I'm Andrew Rowell, and today we're here with Senior Analyst from Argonaut Securities, James Wilson, to talk about the macro gold sector and what the changes are in the sector at the moment. James, we've seen the gold price increase by 10% year to date. We've also seen the gold index up by 17%, the small cap resources index up by 48%.
Yep.
What does that mean? Is there an influx into the sector on the back of the gold price, or is there other drivers coming in?
Yeah, I certainly think so. The gold price is certainly helping drive strong margins in the mining sector. The mid-tier gold miners are really having a swan song at the moment in terms of very good margins, very good profits. That in turn is driving exploration, and that's sort of fueling the whole cycle overall.
You mentioned that there's a bit of a value disconnect between the large cap miners and the emerging ones, and despite the emerging ones going up so well, I guess you're still seeing value in those smaller cap stocks and interest coming in.
Yeah, I think the bulk of the funds at the moment, as we're seeing in the performance of these stocks, is the mid-tier gold miners. People are investing into these guys. They're making lots of money, very good margins. They're also investing a lot into exploration. And they're also paying reasonable dividends on par with some of their industrial counterparts. So that's sort of getting the bulk of the funds at the moment. We're seeing less or so in the smaller exploration, emerging developers and exploration plays, but that is also improving at the moment, and we're seeing funds slowly rotate out of those big guys and into the little guys.
And I guess that's something that we've seen over the last couple of years where it has been, I guess, withheld into those larger cap stocks. We're now seeing them come further down the curve. Is that something that you are expecting over the next 12 months to continue?
Yeah, most definitely. And we're seeing it even now. We're seeing funds flow starting to come into the emerging guys, the near-term developers, both in Australia and overseas, and into the explorers looking for the next big discovery.
And the new funding that's coming into the sector, whereabouts is that coming from?
We're seeing a lot of interest from the institutions within Australia and also retail investors within Australia as well. But we think a lot of those funds that are going to be looking at funding those smaller explorers and developers will be coming from overseas, the North American market in particular.
In your note, you mentioned a few of the, I guess, emerging companies that are coming through, the emerging gold producers, the likes of the Gascoynes, the Dacians and the Gold Roads. What do you like about those stocks?
We like them in particular because they tend to trade on a bit of a value disconnect going into first production. They're generally mispriced because the market either discounts them for the potential for funding risk, as in the ability to get funding, execution risk on the ability to build the project, or development risk on once they actually reach a steady state and maintaining that. So we know management very well. We like what we see, and we don't see any of those risk factors being a particular impediment to getting those projects off the ground.
And so as those risks are mitigated and addressed over the next 12 months, you expect investors to, I guess, reward them with taking away those discounts?
That's right. We generally do a risk weighting on our valuation, and each of those milestones is reached. We unwind that risk weighting to the point where in first production they should be at 100% of our valuation going forward.
Thanks, James, for that. If you'd like to receive a copy of the Argonaut Securities macro gold piece, you can click on the link on the bottom of the screen.